If you're like me, breaking down that big pile of cardboard boxes in the garage is one of those jobs that you just shut your mouth and do. Happy wife, happy life, you know what I mean? Now, during the pandemic, when stimmy cash was flowing and everybody was locked inside and there was nothing to do, that was almost a full time job. Everybody was ordering stuff and the boxes never stopped showing up. But like me, you probably noticed that over the last year or so, that job has gotten a whole lot easier. And me and my big mouth, when Gigi sees this video, she's probably going to go find something else for me to do. So I'm taking one for the team here, folks, to bring you this message. Americans are using a lot less cardboard. And this is not an isolated case of my garage or your garage. This is across the country. There's a lot of economic data to support this. And like a lot of economic data points, it's pointing to a dramatic slowdown for the economy. Check this one out in FreightWaves dated April 27th. Box demand slumps as Americans refrain from discretionary purchases. Q1 earnings point to continued, unexpectedly strong downward pressure on consumer spending. During the busiest Q1 earnings week, several companies involved in the box market, which is among the best leading and coincident economic indicators depending on how one defines leading, have reported downbeat results and cut guidance. The consistent theme has been intensifying pressure on U.S. consumer spending with no end in sight, as many leading indicators, the yield curve, ISM new orders, building permits, bank lending standards, etc., are pointing to further weakness. FreightWaves has written about this issue when discussing Costco's recent results and recent box demand trends, and indeed, companies exposed to the box market are feeling the pain like they haven't in a long time. For example, UPS cut its 2023 guidance based on weaker consumer spending as its volume deteriorated throughout Q1 from down 3% in January to down 7% in March, with April stable at the March exit rate. The company noted that spending on food as a percentage of household budgets has risen from 7% a couple of years ago to 9% in Q1s as Americans are increasingly strapped. Said UPS, U.S. discretionary sales are lagging grocery and consumable sales, and disposable income is shifting away from goods to services. So there's a couple of trends in play here. Obviously, inflation. People are spending more and more of their income on their needs and less money on their wants because wages have not kept pace with inflation, something I've talked about on this channel an awful lot. And there's also a transition going on from spending on goods to more spending on services. That's something Jerome Powell over at the Fed has talked about a lot. And it's also leading to inflation in things like auto mechanics and insurance rates. People have less money to spend on stuff. And if you're not buying stuff and it's not being shipped to you, you don't need a box to put it in, do you? Costco said much the same in early April when discussing its March sales. Its food sales were up considerably, while its sales of all manner of discretionary items were down. Echoing these themes were two of the three largest container board and box producers in North America, International Paper and Packaging Corp of America. On Monday, Packaging Corp reported a historically steep 13% decline in its box shipments in Q1 as consumer spending deteriorated throughout the quarter. And on Thursday morning, International Paper reported an 8.5% box shipment decline in Q1 as consumer spending was focused on non-discretionary items and value and took a historically large amount of production downtime to adjust to the low demand. And here you go on this chart, you can see Packaging Corp's quarterly change in actual box shipments going all the way back to 2008. And check this out right here. The first quarter of 2023 saw the largest quarterly drop in total cardboard shipments for Packaging Corp, going all the way back to the height of the GFC. Even the first quarter of 2009 did not see such a precipitous drop in the amount of cardboard being shipped by Packaging Corp. Again, people are just not buying stuff, and so you don't need anything to ship that stuff in. And there's more than just cardboard data to support this. The source of most of those boxes sitting in your garage, Amazon, even hinted at this in their quarterly report. The biggest online retailer in the U.S. is warning of cautious spending. This one in Yahoo Finance dated a few days ago. Amazon offered a downbeat outlook on domestic consumer spending, joining the likes of UPS and 3M amid growing concern that rising interest rates and tighter lending standards could lead to a recession in the U.S. On an earnings call that discussed everything from artificial intelligence to slowdown concerns at Amazon Web Services, the e-commerce giant also flashed a warning about its long-standing retail business. So it's not just Rivian, it's not just Amazon's cloud computing. They're actually talking about Amazon's core business. Online retail shoppers are starting to cut back their spending. The uncertain economic environment and ongoing inflationary pressures continue to be a factor, and we believe is continuing to drive cautious spending across consumers, Amazon CFO Brian Olsavsky said on the company's earnings call on Thursday. This means our customers are looking to stretch their budgets further and are focused on value. While the company grew overall net sales in North America by 11%, Amazon's online store revenue of $51.1 billion fell by about $30 million from the same period a year prior. Now, on the surface, those retail numbers, they're not terribly alarming, right? Sales fell $30 million. Well, we're talking about $51.1 billion in sales here. But you also have to keep in mind the rate of inflation. These numbers are not adjusted for inflation. So if nominal sales have fallen even by a token amount, you also have to subtract the rate of inflation from that. And now you realize a whole lot less stuff is getting shipped over at Amazon. Even as recently as today, we've got consumer economic data to support this trend in lower cardboard shipments. This time, it's the United States Red Book Index. Now, the U.S. Red Book Index is a year-over-year measure of same-store sales growth. It takes a snapshot of a vast number of retailers. This is a really good indicator about the health of America's retail environment. And the Red Book Index in the United States increased by just 1.3% in the week ending April 29th. Just 1.3%. Now, again, this number is not adjusted for inflation. Now, even if you take the most recent CPI reading of 5% at face value, still you can see these retail sales are not keeping up with the rate of inflation. Although the nominal value is growing, it's growing at a much smaller rate than the prices are going up, and that means less stuff is shipping. And that's just if you take CPI at face value. Keep in mind the actual rate of inflation is widely considered to be significantly higher than the 5% CPI is telling us. So any way you look at it, this chart is showing less stuff is moving in the economy. And when you zoom out a little bit on this chart, you can see that this trend has been going for quite a while. This actually started as far back as last summer. The rate of growth in nominal retail sales has been slowing consistently, going all the way back to last July, consistently underperforming the rate of inflation. Less stuff is moving. So any way you look at it, folks, the data is pretty clear. The American consumer is in dire straits right now. After a year of incredibly high inflation, we're spending way more money on our needs, much less money on our wants, and that means a much smaller pile of these Amazon boxes stacked up in the garage for Jack to break down and stuff into the recycling bin. It also means your cat is going to have to make do with something else to improvise a bed out of. Kids are going to have to make their living room forts out of couch cushions and blankets. And you might just have to cancel your plans to make a perfectly lifelike diorama of a hillside Sao Paulo slump. That's really good. Till next time, live small and dream big.